Well, let me welcome on board Arul Selvan, the CFO at Cholamandalam Investment and Finance, joining in on the show right now. Arul, Q4 has been a good quarter for you. We've seen some good growth across all businesses. Your AUM growth as well has come in at 35%, which is more than the 30% that you had guided earlier during our last interaction. Can this kind of momentum stay? And what is it that you're guiding for FY25 now for AUM?
So, see, AUM growth, we had revised it to around 30% levels when we spoke, I think, during Q3 and Q4. We were always, we tend to be on a conservative side. And then we'd like to, do what little better than what we talked about. As you know, the first two quarters had been very high comparatively because the base last year was low. And so we had a good growth in those two quarters. And subsequently, it had started averaging out when the base in 23 became larger. Thereby, the growth in the current quarter as well as in the current half year, it seemingly to be slightly lower. But still, we reached a decent number of around 30% plus for the AUM growth. Next year, we are looking, again, I would not want to put too much hopes. We will still keep our target at around the 20-25% level. And because a lot of additional factors needs to be, considered, monsoon, elections, geopolitical issues, etc. So right now, let us keep it at the 20-25% level. And as we progress through the year, we can revise it.
So loan against property has seen a significant year-on-year growth in disbursements. What is aiding this, and where is the outlook? What is the outlook ahead?
So this loan against property is entirely an LAP book, and we have a separate home loan book, unlike let's say HFC, which may be doing home loans as well as separately LAP as part of their overall book. We have a separate listing for home loan and separate listing for LAP business verticals. We share these independent numbers. The growth is primarily driven because of the geographical expansion that this particular business vertical has been going through. We had started this business almost 14-15 years back, and we had been, watching this for quite some time because it's a little long-range product, so we needed to go through certain life cycles of the portfolio. We are now geared, and over the last 2 years, we have now been moving out of being a south-based, focused, vertical for the LAP. We have now started moving into other parts of the country. Though south still has a larger share, we have started moving into west, north, and east, and we will see that progressively growing in the subsequent periods also.
And can you tell us a little bit about how you're looking at your AUM mix evolving?
Yeah, the vehicle finance is has been the largest and is still the largest, and progressively its share as a part of the AUM will slow down a bit, but that does not mean the vehicle finance is growing because the base of that book is very large. It is growing. We have a decent market share in the segments we participate in the vehicle finance. But progressively, we have articulated this also in earlier calls. The vehicle finance will become 50% of the overall book. The loan against property and the home loan would constitute around 35%, which is like a property-based, lending. And then you will have the other newer segments which we have started, like the unsecured and the SBPL and the SME segments, contributing the balance 15%. Broadly, the unsecured should be in the range of around 8 to 10% levels is what we are targeting right now.
Sure. I also want to talk about the used vehicle segment because this space has seen a pretty robust demand, especially after COVID. What's the outlook now going ahead in terms of demand as well as disbursement? Are you going to continue to focus on the passenger vehicle space?
Used vehicle, we do both the commercial and passenger. In the used vehicle, we do heavies, mostly heavies in the commercial vehicle, and in passenger cars also we have now started taking a larger share. The used vehicle growth is predominantly driven also by the fact that there is a larger cost difference between the BS4 vehicles and the BS6 vehicles, and that's where people who would have even preferred to go for a newer vehicle are now preferring slightly younger vintage used vehicle, let's say like a 5-year-old vehicle or a 4-year-old vehicle, and that's where you're seeing the traction in the used vehicle little larger. But as we move through the next 1 or 2 years, and then the differentiation between the PS4 and the PS6, becomes lesser, and also the vintage of the PS4 becomes larger, then this demand will be in a way. But by then, PS6 used vehicles will also come into the play, so you will see some traction there. Passenger cars are also, good. There is a good demand for used vehicles, and we are capitalizing on that too.
Now, you've recorded good growth in home loans. Disbursements are up 25%. What is the outlook going forward there?
No, the home loan segment will grow, but our focus is more on affordable housing segment, which is self-employed non-professionals doing mostly self-construction in tier 3, tier 4 type of cities and towns. So our home loan is slightly different from the larger players where salaried class and builder financing or builder large flat promoting type of demand is being catered to. We primarily cater to the self-employed non-professionals who will build their own house with their own in a small number. Individual ticket sizes are smaller, but this demand is large in the tier 3, tier 4 type of geographies. And we are going again, like what I said in lab, we are going across the country with going into west, east, and north to expand this business. And since we have our foothold of vehicle finance branches there, it becomes easier for us to penetrate into these geographies.
Okay. And I just wanted to get in a perspective from you as well, because your credit cost has halved over the just one quarter, but we have seen a hike in provisioning. Do you plan on hiking provisions going ahead, and how will this affect your margins?
See, the provisioning is driven by the the ECL norms. So depending on the portfolio, we have made certain. We keep fine-tuning the ECL provisioning norms. Accordingly, we have done it this time also by, as the portfolio of certain sub-products become larger, then we create, separate, ECL norms for that, like the PDLGTs for those products. Accordingly, we done that. And now that we are increasing the focus on home loan and LAP, we have again done different approach to the ECL norms, and accordingly we have provided for that. There is no incremental or additional provisions we created. The NCL by itself normally tends to be lower in Q4 because Q4 is a lot more push on collection and all the year-end activities come into play. And so you will see always a drop in the NCL provisioning in year-end. But we have kept a decent enough provision coverage considering our portfolio quality, which is around 45% plus, and I think that we feel is adequate, more than adequate in the current scenario.
Right. Also tell us about the recent fundraising we've seen in terms of thousands of crores. How is it that you plan to deploy these funds, and how is it that it's going to affect then your debt?
So we raised equity in October. So that was around 4,000 crores. We raised 2,000 by way of direct equity and 2,000 by way of compulsorily convertible debentures, which is shown under borrowings right now, but which will get converted into equity by September 26. Apart from that, from a pure debt side, we did do some new ECBs with a multilateral as well as with a domestic with a multinational bank, and we will focus on that because we also want to widen our liability side inflows from multiple sources. We have done public debt, 5,000 crores we did last year. We will continue to focus on public debt this year also. The target is to do around 10,000 crores. We will scale up ECBs. We have done certain financial institution-based borrowings like NABARD and SIDBI. So those will also take away our too much dependence, if any, on the banks, and widen the scope of our liability book.
All right. Thank you so much for taking time out and joining in. By the way, the markets are holding on to the 22,000.